Banks collected $15 billion in overdraft fees last year from the people who could afford it least. The same institution that charges you $35 for a $4 mistake will one day fly a private banker to your office and negotiate custom deals on your behalf. Here is exactly how banks treat you at every level of wealth, from $0 to $25 million. You overdrafted by $4. A coffee you forgot was scheduled to charge. The bank does not care that it was $4. The bank cares about the math, and the math says you went negative. $35. That is the fee. The penalty for being broke is that you become more broke. 9% of bank customers pay 80% of all overdraft fees. Not the wealthy ones, the ones who cannot afford it. You pulled the account back. 20 hours of overtime to get to $200. Stay positive for 1 week. Nobody clapped. Nobody noticed. The bank noticed. But not in a good way. The maintenance fee hits anyway, $12. You are now paying a bank to hold the money you barely have. The bank is a business, and right now, you are an expense, not an asset. Something shifted. Not in your account, in the way the bank looks at you. Your direct deposit hits every 2 weeks. Consistent. Predictable. The maintenance fee disappears. Not because you asked. The system saw your direct deposit and waived it automatically. You did not get a reward. You simply stopped being punished. That is the first rung. You log into the app and your credit limit changed. $4,000 became $9,500. You did not ask. You did not apply. The bank just decided you were worth more rope. Then you get a call, not automated. A person. Your bank assigned you a relationship banker. Someone whose job is now to keep you. This is the moment the bank stops treating you like a liability and starts treating you like an opportunity. The bank calls you a preferred client now. Your relationship banker becomes real, a person who remembers details. He emails on your birthday, not automated, written. You call the general line once by accident. Someone intercepts the call within 2 minutes and transfers you to your dedicated contact. The phone tree was never built for you. You just did not know that yet. The bank stops being a place you visit. It becomes a service that comes to you. Your banker does not email anymore. He calls. A colleague drives to your office. Not the other way around. He brings printed reports in a leather folder. The rate on your savings account is no longer the public rate. It is a negotiated rate. The published number is for everyone else. Private banking. The phrase sounds the same as wealth management, but it is not. Wealth management is a service. Private banking is a relationship, and relationships do not follow rules. They negotiate them. The bank assigns a dedicated team, not a banker, a team. Legal, tax, investment, estate planning. You are no longer a customer. You are a portfolio. You do not have a banker anymore. You have a relationship. Your relationship is a named line item in someone else's performance review. Losing you would matter to careers. The institution does not compete to keep you. The institution organizes itself around not losing you. The same bank that charged you $35 for a $4 mistake will now absorb a 6-figure error without mentioning it, because the math changed, and the math is all that ever mattered to them. Somewhere right now, someone has a minus sign in front of their balance. They overdrafted by $4. The same institution that will one day fly out to ask their opinion on emerging markets is currently charging them $35 for not having enough. You are the same person at every balance. The bank just decides who you are, based on what is next to your name. This channel exists because nobody taught you this in school. Subscribe if you want to understand money before the bank decides your worth.